Well, HUB24 has also been on the acquisition trail recently as it sets to acquire competitor Class via a scheme of arrangement. Chief Executive Andrew Alcock expects the deal will be 8% earnings per share accretive by fiscal year 2023 and deliver cost synergies of about $2 million a year. He joins us now live via Skype to go and talk us through the deal. Andrew, welcome back to the program and congratulations. Give us some sense as to the strategic rationale. So operates in a similar space to you, but what's it going to go and deliver for HUB24 longer term?
Oh, thank you for having me. It really is a very, very interesting acquisition. When you think about the marketplace that we're in and the marketplace that Class are in, we're both involved with working with professional advisors, whether that be financial advisors, accountants or lawyers, helping Australians get a better financial future. So we're in the same space, but in slightly different places or parts of that space. So absolutely from a strategic rationale, we're both market leaders, we're both award winning, and this is about making it easier to get great advice to implement advice and tax and strategies for consumers, and it makes it far better for us to work together. So I think there's a lot of commonality here. We want to let Class run as its own business at the same time as us working on how we can build far better solutions for professional advisors and for their clients and make it easier and simpler to deliver. It's about our strategy, which is about let's reshape this industry. Let's make it work better.
What about Class's recurring revenue streams? Quite strong. Dominates when it comes to that. Was that one of the attractive natures to go and help smooth out earnings?
From Class's point of view, they've had great organic growth and they've had great acquisitive growth as well. And I think the attraction for us as both shareholders, you get diversified revenue streams here as well. You get a bigger footprint. But really, it is the strategic acquisition and the nature of what we can actually do together to change this landscape. That's what's exciting for me.
Well, let's go and talk about that. What are some of the plans? Because you're going to go and have a lot more customers on the books. What can you potentially do when it comes to services, cross-selling opportunities? Is that going to be the focus?
Look, as I said, it is a strategic play, hence the synergies are quite light on in terms of how we've announced $2 million and 8% EPS. But, and that 8% EPS growth is excluding revenue synergies. Look, imagine a world where you're seeing your accountant or your lawyer and you're setting up a self-managed super fund or a family trust, and where that could integrate quite nicely with those called wealth vehicles could be established at the same time as a HUB24 account, and it all seamlessly works. So it's about that kind of streamlining. The other side of it is we quite often talk about building the platform of the future, not because we think our platform needs to change, we're absolutely market leading, but in terms of we want to keep disrupting the market and creating greater outcomes for customers. Class has 250 integrations with other product providers, so they can actually do self-managed super fund reporting and general ledger and accounting for those types of vehicles. We have 95. So we see ourselves as a market leader, yet Class has got more than double that which we have. So in terms of thinking about data as the future of platforms and financial services and integration, and allowing people to have choice and flexibility, they can choose the products they invest in, they can choose the technologies they use, but if we can bring that together from a data point of view, there's lots of cross-sell opportunity there, but it really is about customer utility and challenging the status quo and really making this industry start to fire with harnessing technology in the way it should have been done years ago.
When it comes to this potential acquisition, should it go ahead, what's the immediate plans for Class? What are you looking to go and do with the staff and the company itself? It will be standalone to begin with, or are you looking to integrate it immediately into the business?
We've been very clear that we think Class is a market leader in its own space. It chases different clients to us, and we absolutely love what they've been doing and love the team there. So we want them to keep executing on that strategy, and we're going to help invest in that strategy. So at the same time, whilst there'll be a business unit inside Hub, we're all about our own growth and not looking at ending up in a massive integration project at all. It's really about how we can work together. So there'll be some common projects and some common product development, but absolutely we want the team to run their own race. So there'll be some synergies, but really this is about how we can work together to deliver on some of the outcomes I talked about earlier.
You mentioned that magic word growth when it comes to revenues and customers and the like. Where is the focus going to be moving on from here? Of course, this is an acquisition. Is that going to be a focus continually over time?
From HUB24's point of view, look, we'll keep our eyes open about what's in the marketplace. We're absolutely participating in the marketplace actively, but we jealously want to protect our strategy and our customers, and we don't want to get distracted through integrations and acquisitions. We don't need to acquire to grow. As you'd know, like we just had a record quarter again, and with $3 billion of net flows for the quarter, which is amazing. We're very proud of that. So it's not about acquiring businesses because we need to grow. It's about acquiring businesses so we can enhance our proposition. So yes, we'll keep our eyes open for other opportunities, but not at the cost of focusing on our current customers and our current strategies, which we intend to keep running hard at.
You mentioned record inflows. The share price has tripled over the past year. Do you feel a sense of a bit of pressure building because you have so much to go and live up to? The market is so excited about your prospects. How difficult it is to go and live up to those expectations?
Well, you certainly know you're alive. You certainly know that your shareholders and your customers are expecting big things, but we've done that over the last 8 or 9 years I've been in the business, and we continue to get that there. So yes, I absolutely feel that, but at the same time, I think the opportunity set is there. We're in the middle of a massive shift in wealth management, and with talented people and great intellectual property, I think that there's more opportunities for us to keep delighting our stakeholders. And yes, we have to work very hard, and we're very humble with that success. But you're right, we know we're alive, and we know we've got a challenge ahead of us, but we're certainly up for the challenge.
Exciting times indeed. Andrew, thank you for your time this morning. As always, I look forward to speaking again soon.
Thank you. Cheers.
Andrew Alcock there joining us from HUB24. You can see the share price up 1.1%. Bit of a familiar theme over the past year, as I mentioned, tripling in value.